What if I told you there's a specific number of SCHD shares that could replace your entire salary? Not in 30 years, not when you're 70, but potentially in the next 10 to 15 years. If you'd invested just $37,610 in this fund back in 2014, your annual dividend income would have grown from $1,047 to $2,658 by 2023. Your income literally doubled, without adding a single penny. When Schwab announced a 3-for-1 stock split for SCHD in October 2024, dropping the price from $85 to just $27 per share, something fascinating happened. The fund became accessible to millions more investors overnight. Today, I'm revealing exactly how this one ETF could become your entire retirement plan. This is educational content about investment strategy and retirement planning, not personalized financial advice. All investments carry risk, including potential loss of principal. Past performance doesn't guarantee future results. Consult with a qualified financial advisor for your specific situation. Let me tell you about Harry. Harry's 40 years old with $300,000 saved. Makes good money, but Sunday nights kill him. That sinking feeling before another week of pointless meetings. Every retirement calculator says the same thing: work until 70. Then I showed Harry SCHD, the Schwab U.S. Dividend Equity ETF. But this isn't your typical dividend fund that just chases yield. SCHD is a quality filter disguised as an income fund. It starts with thousands of U.S. stocks, then applies 4 brutal filters: 10 consecutive years of dividend payments. Miss 1 year, you're out. Cash flow to debt ratio. Can you actually afford your dividend? Return on equity. Real profits, not adjusted EBITDA positive. 5-year dividend growth rate. Your dividend must be growing. Out of thousands of stocks, only 103 make the cut. Companies like Texas Instruments, Cisco, Chevron, ConocoPhillips, Merck. These aren't speculative plays. They're profit machines printing cash for decades. The fund's 5-year dividend growth rate? 13.05% annually, while inflation averaged just 3.96%. Your purchasing power doesn't just survive, it explodes upward. Now, let's decode what Harry discovered. SCHD currently yields 3.85%. Harry thought he needed $5,000 monthly to retire. That's $60,000 annually. But examining his actual expenses changed everything. Mortgage? Paid off by retirement? Kids' college? They'll be graduated. Commuting costs? Gone. His real need? About $3,000 monthly. That's $36,000 annually. Factor in Social Security averaging $1,827 monthly. Harry only needs SCHD to generate about $1,200 monthly. The exact amount of SCHD required? I'll reveal the formula shortly. But first, understand this about dividend investing. The yield changes based on when you buy. When SCHD drops 20%, the dividend usually stays the same or grows. Your yield on new purchases jumps from 3.85% to potentially 4.8% or higher. Same dividend payment, lower price equals higher yield. Forever on those shares. Harry started seeing market crashes as opportunities to lock in higher income. After the October 2024 split, you can now buy 11 shares for what used to buy 3. Dollar cost averaging becomes smoother. Building positions feels achievable at $27 instead of $85. Here's what transformed Harry's perspective on financial independence. SCHD's dividend doesn't just sit there, it grows relentlessly. From 2018 to 2023, the dividend grew from 0.4798 to 0.8860 per share. That's an 84.7% increase in income from the exact same shares. Let me show Harry's timeline with his $300,000 starting point. At 3.85% yield, that generates $11,550 annually today. Watch what happens with dividend growth. Year 1, $11,550 income. Year 2, $13,056 income. Year 3, $14,753 income. Year 5, $18,838 income. By year 5, income increased 63% without adding a dollar. But Harry's adding $2,000 monthly to his position. $2,000 monthly for 10 years is $240,000 in contributions. Factor in 7% annual appreciation and dividend reinvestment. By age 50, Harry could have over $1 million in SCHD. At 3.85% yield, that's $38,500 annually. But with dividend growth, it could exceed $50,000. Retirement at 50, not 70. Harry's major concern: what happens when markets crash? Let me show you something remarkable. During the worst market conditions, SCHD's dividend keeps growing. 2018 Q4 correction. SCHD falls 11.4%. Dividend grows 6.96%. 2020 COVID crash. SCHD plummets 28.9%. Dividend grows 17.64%. 2022 bear market. SCHD down 17.8%. Dividend grows 13.90%. This isn't luck, it's the methodology working. SCHD's companies have the financial planning strength to keep paying and growing. Low debt, high cash flow, proven business models. When SCHD's price drops but dividends grow, the yield increases. A 20% price drop might boost your yield from 3.85% to 4.8%. That higher yield locks in forever on shares bought during the crash. Harry realized, so I actually want volatility while accumulating? Exactly. Low prices mean higher yields. Higher yields mean more income forever. Since inception in 2011, SCHD has never missed a quarterly payment. The annual dividend has increased every single year. How can I get there faster? Harry asked. Here's the optimization strategy. Maximize tax-advantaged accounts. $23,000 in 401k, $7,000 in IRA. That's $30,000 yearly growing tax-deferred. Reinvest all dividends during accumulation. Harry's $11,550. Initial dividends compound into massive additional shares. Take advantage of the post-split price. At $27 per share, build positions more systematically. Focus on the crossover point. When dividend income exceeds expenses, that's your freedom point. Consider tax optimization. SCHD's qualified dividends are taxed at 15% versus 22 to 37% for ordinary income. Harry discovered his crossover point happens around age 48. 8 years, not 30. But he doesn't need full coverage to change his life. At 45, when dividends cover 70% of expenses, he could switch to part-time work or pursue passion projects. Here's exactly how to calculate your SCHD retirement number. Step 1. Determine true retirement expenses. Strip out mortgage, work costs, kids' expenses. Harry went from $5,000 to $3,000 monthly. Step 2. Subtract guaranteed income. Social Security, pensions, other streams. Harry's $3,000 minus $1,827. Social Security equals $1,173 needed. Step 3. Calculate your SCHD target. Annual need divided by 0.0385 equals principal required. Remember, dividends grow. Your target shrinks over time. Step 4. Work backwards from your target. Current starting point plus monthly contributions plus growth equals timeline. Step 5. Factor in dividend growth. Even 5% annual growth dramatically accelerates everything. But here's the secret that changed everything for Harry. You don't need to reach your full number to transform your life. Once dividend income covers basic expenses, work becomes optional. Every share of SCHD is a tiny employee that pays you quarterly. At $27 per share, you're hiring employees for less than a nice dinner. They work forever, through crashes, through inflation, through everything. Stack enough employees, and you never work for anyone else again. Harry's now on track to reach his crossover point by 48. But something interesting happened once he understood the math. The stress left his Sunday nights, not because he retired, but because he could see the exit. Every SCHD share is a brick in his escape route. Every dividend payment proves the plan is working. Every market dip accelerates the timeline. Your retirement date isn't determined by your age. It's determined by when dividends exceed expenses. Harry's countdown isn't in years anymore. It's in shares. The October split didn't create value, but it created accessibility. More people can build positions. More shares can be accumulated. The formula is simple. Take your annual expense need. Divide by 0.0385. That's your target. But the real number is smaller than you think because dividends grow. What requires $1 million today might only need $700,000 if you're building over 10 years. Because by the time you reach $700,000, dividend growth has increased the payout enough to meet your needs. This is the magic of compound interest combined with passive income generation. Here's what nobody tells you about wealth building through dividends. It's not about timing the market. It's about time in the market. It's not about finding the next Amazon. It's about owning profit machines. It's not about getting rich quick. It's about getting rich surely. The hardest part isn't reaching your number. It's believing the number is reachable. Harry thought he needed millions. He doesn't. He thought retirement was at 70. It isn't. He thought market crashes would destroy his plan. They accelerate it. At current yields, every $100,000 in SCHD generates $3,850 annually. That's $320 monthly, forever. Growing every year. Stack 5 of those $100,000 blocks, and you've got $1,600 monthly. Stack 10, and you've got $3,200 monthly. The exact number you need depends on your expenses, your timeline, and your other income sources. But it's almost certainly less than you think, because dividends grow, because Social Security exists, because expenses drop in retirement. Harry called me last week. He just bought another 100 shares. Every share feels like buying a day of my life back, he said. At $27 per share, freedom has never been more affordable. The next dividend payment is coming. The only question is whether you'll be receiving it. Your retirement countdown starts with your first share, and that countdown could begin today.